Good afternoon, James Preston with you on 𝐊𝐿𝐴𝐼𝐼 TV, and this is the Market Movers program. Well, the ASX 200 is edging lower on the first day of the month, whilst the commodities supercycle and economic recovery prospects are fueling market momentum. Inflation expectations and virus concerns are capping the equities gains. On that note, let us zoom our lens on the market performance today and the drivers under the spotlight. Well, the market players seem to be on a selling spree at the start of the month. Whilst they missed overnight with Wall Street performance for the US market closing on account of Memorial Day, European markets displayed a downtick amid rising inflation concerns, and the virus threat in Victoria is also spooking investors. Australia's second most populous state, Victoria, the epicentre of the country's latest coronavirus hotspot, reported 9 new cases of community transmission in the past 24 hours. Taking the current cluster to a total of 54. Many large exposure sites have been added to the exposure site list over the last 36 hours. Victoria went into a strict 7-day lockdown on Friday after new COVID-19 infections in the state capital of Melbourne ended its 3-month run of 0 community cases. The swelling cases, particularly a mystery case in a worker at an aged care home in the city, are raising questions over whether the lockdown will be extended beyond the 7 days announced initially. The prospect of a larger outbreak in aged care homes is highly concerning, given hundreds of elderly Victorians in such facilities died of COVID-19 last year. As per the latest update, an aged care centre of concern in Melbourne has been cleared after it was revealed an infected worker had not worked there whilst infected. The latest outbreak was caused by a returning resident who left hotel quarantine in neighbouring South Australia just after testing negative, but then later tested positive whilst in Melbourne. Medical officials have said the latest COVID-19 variant, first detected in India, was likely to be more virulent than the original strains, taking just 1 day to infect another person compared with earlier strains, which could take between 5 and 6 days. However, the latest economic data releases are reflecting a somewhat optimistic picture despite the pandemic. A monthly gauge of Australia's manufacturing sector grew at the biggest clip on record in May, bolstered by the red-hot recovery across the economy. The Manufacturing Purchasing Managers Index, or PMI, compiled by IHS Markit, a financial data group, reached 60.4 in May on a seasonally adjusted basis, up from 59.7 in April. From manufacturing to building, and the country's housing scenario also deserves a closer look. Housing markets around Australia continued to surge in May, with CoreLogic's National Home Value Index up 2.2% over the month. The rise in May was a stronger result compared with 1.8% in April, but weaker than the 32-year high recorded in March, when values surged 2.8%. CoreLogic's research director, Tim Lawless, observed that growth conditions remained broad-based both geographically and across the housing types and valuation segments. The Australian Bureau of Statistics has released some interesting data, and before we unpack it all, it's time for a short break right here on 𝐊𝐿𝐼 TV.
At 𝐊𝐼 TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. 𝐊𝐼 TV.
Welcome back to 𝐊𝐼 TV. This is the Market Movers program. I'm James Preston, and it's great to have your company. Time to unpack some important data released by the Australian Bureau of Statistics in relation to dwelling approvals. The information that dropped today, as per the latest ABS release, found that the number of dwellings approved fell 8.6% in April, seasonally adjusted, following an 18.9% rise in March. Notably, the fall in the total number of dwellings approved in April was driven by private sector dwellings excluding houses, which fell 28.6%. However, what is interesting to note is that while there was a fall in overall approvals, the April result highlights the continued strong demand for detached housing, with private sector house approvals reaching a new record high in April, up 4.6%. Australia's current account surplus in seasonally adjusted terms increased $2.3 billion to a record $18.3 billion in the March quarter 2021, according to the latest figures from the ABS. The upbeat result is driven by a record $5.2 billion increase in the balance on goods and services surplus. Exports of goods and services rose 7%, while imports also rose 3%. Consumer confidence, though, has taken a hit according to this data. ANZ Roy Morgan consumer confidence dropped 2.8 points to 111.4 this week as Melbourne and Victoria were plunged into a fourth lockdown. The Reserve Bank of Australia is also meeting this afternoon to announce the monetary policy decision, which could have wide-reaching ramifications. With a barrage of macro numbers likely this week, markets may be reacting more frequently than ever. However, today, market sentiments are somewhat outweighed by the broader sectoral trends. There is a tug-of-war between sectors, while materials and energy indices are pulling the strings of ASX 200, healthcare, financial and IT sector dips are capping the gains. Australian energy players such as Santos Limited, Beach Energy, Oil Search and Woodside Petroleum are all trading higher today amid an oil prices uptick. Oil prices traded higher on Monday as well, with Brent trading near $70 a barrel on growing optimism that fuel demand will see an uptick in the next quarter, while market participants are still maintaining a cautious stance ahead of the OPEC Plus meeting this week. Now, just before we dig into the mining sector with some of the day's top ASX gainers, it's time for another short break here on 𝐊𝐶𝐤𝐼𝐴 TV.
The market takes the weekend off, but your money won't. Get a comprehensive update on the ASX listed stocks and market trends. Watch the experts touch upon the fundamental and technical developments and trending strategies in the equity space. We will be your daily guide as you explore the Australian share market, be it global vaccine developments or China's trade relations or global political turmoil or economic revival prospects. We will bring you live updates driving the equity market trends. 𝐊𝐶𝐼𝐴 TV.
Thanks for your company on 𝐊𝐶𝐼𝐴 TV. I'm James and this is the Market Movers Show. Let's take a look at the mining space. The heavyweight Australian miners Fortescue Metals, Rio Tinto and BHP Group are all trading in the green zone. Benchmark iron ore futures on the Dalian Commodity Exchange for September month delivery surged 5.2% to 1,106 yuan per tonne, after the market recorded heavy losses in the last few weeks amid China's vow to stabilise surging commodity prices. Moreover, Shanghai copper registered a second consecutive positive month as prices firmed on massive US infrastructure spending plans and potential supply threats from Chile. The most active July copper contract on the Shanghai Futures Exchange closed 0.9% up at 73,950 yuan per tonne, registering a 2% monthly gain. We are discussing market trending updates, and Reece, Whitehaven Coal and Domino's Pizza Enterprises are also leading in the gains today. However, tech stocks are badly hit in their biggest one-day fall in nearly 2 weeks. Buy now, pay later giant Afterpay shed gains on the board. Appen, global leader in the development of high-quality human annotated training data for machine learning and artificial intelligence, also slid on the index. Then, accounting software firm Xero also traded in the red territory, leading to a pretty poor day for IT on the stock exchange. Moving on, the healthcare index also traded in the red territory amid local virus threats. Regis Healthcare, Prom Edicus, PolyNovo edged lower on the board. Gold stocks also followed suit, declining even as prices were on course for their biggest monthly jump since July 2020. Gold miners Newcrest Mining and Northern Star Resources all shed gains today. And also on the decline, ARB Corporation, Lynas Rare Earths and Eager Automotive all slid lower. And just before we have a look at today's top movers, with a big move influenced by a Chinese governmental policy, we'll take another short break here on 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV.
At 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV.
Thanks for joining us on 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV. I'm James Preston and this is the Market Movers program. Great to have your company. It's now time to turn our attention to the top gainers on the ASX. Shares of infant formula makers Synlait and A2 Milk have jumped after China's three-child policy. China on Monday relaxed the cap to allow married couples to have up to 3 children, up from the existing limit of 2. The move comes after recent data showed a dramatic decline in births in the world's most populous country. Synlait's stock also gets a boost from Dunsandel facility resuming ops after it was closed due to flooding at Canterbury. Moving on to the next stock gaining today, shares of Nine Entertainment hit a 3-month high on content deals with Google and Facebook. The publisher and broadcaster has assigned multi-year content supply deals with Google and Facebook under Australia's new media bargaining code. Notably, the 3-year deal with Facebook is for supply of news video clips and access to digital news articles on Facebook's news products, while the 5-year deal with Google includes the supply of news content, excluding video, for News Showcase and other news products. Google will also expand its marketing initiatives across Nine's platforms. Moreover, Nine expects growth in publishing division EBITDA, which is the earnings before interest, taxes, depreciation and amortisation in financial year 2022 in the range of between 30 and 40 million. And now let's have a look at this ASX listed stock that's trending today, namely Infomedia, which has skyrocketed on announcing the completion of the acquisition of US-based e-commerce firm SimplePart. The software provider also anticipated final revenue in the range of 95 to 96 million. According to Infomedia, SimplePart is a strategic extension of Infomedia's core global offering and uniquely positions them to offer their customers an expanded range of market-leading business-to-business and business-to-consumer parts, service and data insight solutions. As per the information from Refinitiv, RBC Brokerage noted that the trading update, albeit a slight miss, is likely to be seen as, quote, better than feared, particularly given the FX headwinds. And finally, shares of Vonix Limited near a 4-month high on customer order growth. The telecom firm says as of May 31st, SME customers were up 27%, and they've secured 45,000 active private branch exchange users during that period. Besides, national broadband network orders with 4G backup grew 95% year on year in the 2021 financial year to date. According to the company, 5G services launch is now imminent, having been selected by Optus as a key 5G partner. Well, that's it for the Market Movers show. Hope you enjoyed it, but make sure to keep it locked on 𝐊𝐴𝐼𝐴 TV. Our next live show isn't too far away. The Economic Corner up for you in just a moment. I'm James Preston for 𝐊𝐴𝐼𝐴 TV.